It's not really an asset because you're having to live in it. Really, a house is a utility. Now, the fact that none of your generation owns any real estate, okay, they still live in something. They're paying for something. You can't live in your Bitcoin. And I believe that real estate people and Bitcoin people have a lot of things in common. This yin-yang kind of relationship, one's real, one's digital, okay? One cash flows, one doesn't. One is very stable, one's like a maniac. In fact, the audience that owns it, if it's not maniacal, they become bored with it. So I'm trying to convert a piece of paper into something better than paper, which is cement, glass, steel, Bitcoin. I don't do stocks. I do a couple of things and I do them over and over and I beat them to death. The people are asking me to do the thing I love to do, which is help people. The fact that we don't understand what Bitcoin is isn't a reason to say no. Let's just take it. I don't know that Bitcoin is the real estate investment that we were sold. I think they're very different in that way. You know, I would not compare the two. I think they work together better than they work separate.
Hi, Grant. Thank you so much for being on.
Yeah, thank you. Thanks for having me. I appreciate it.
Absolutely. Yeah, your brother was actually my 100th episode, and now I'm at 607. So
Wow.
Having you on was really cool. Now, thank you so much for being on.
Wow. Yeah, and I know Gary's been on more than once, right?
He has been on 3 times now, like 2 times remote and 1 time in Vegas. I think I saw you there like for a millisecond because he said hello to you when we went to our set.
Yeah. My brother's a super intelligent guy. I'm a big fan of his, not just his twin brother, but a huge fan of him and his career and his thought process.
Really cool. Maybe before we get started, for the 3 or 4 people that don't know who you are and who Gary is, give us an overview of like who you are and especially why you now got excited about Bitcoin also.
Yeah. So, I am a business owner. I own a handful of businesses, here in Miami, Florida is where I live today. Grew up in Louisiana. You referenced Gary. I'm a twin brother to my brother, twin brother to my brother from the same mother, by the way, American joke. And, we grew up in Louisiana, raised by a single mom. We were in the middle class and educated as a middle class kid to work hard, save your money, go to school, then go to college, buy a house, the whole routine, that they teach you in America. They indoctrinate people here in America to basically stay broke or stay in the middle class. And, went to college, got an accounting degree, got out of college, couldn't get a job in accounting, cause there was a massive unemployment. This is 1981. And it was about 25% of the people were unemployed where I lived, 1 out of 4, a real number. And if you didn't have a connection with the refineries, because I grew up in a refinery labor town, then you just didn't have a job. So I was in the unemployment line. I don't know what you call it there in Austria, but this is a government line for people that can't work. And I was there to get my unemployment check, first unemployment check of my life, with a college degree, by the way. And my uncle, my dad had passed away, I guess, 13 years before this. And my uncle who saw me, Uncle Vincent, said, "Son, what are you doing here?" And I said, he didn't know whether I was Gary or Grant. He couldn't tell the difference. They never could. And he's like, "Son, what are you doing here?" And I said, I'm here to get my unemployment check. And I was so ashamed of it, and he's like, "Didn't you just get out of college?" I said, "Yeah." He's like, "You didn't get out of college to get an unemployment check." And I said, "I know." I said, "But I can't get a job." He's like, "I'm going to get you a job with a car dealer. Call this guy and you're going to be selling cars tomorrow." And I'm like, I didn't go to college to become a car salesman. And he says, you didn't go to college to be unemployed either. Go get that job. And I did. I went and got the job. The guy hired me and I hated sales. I hated car sales. I hated the label that came with car sales. But nobody else would hire me. So I had to figure out how to get good at it, And so I started studying how to become, a professional salesperson and separate myself from all the other, car salesmen. And, I was on the road to becoming a professional salesman, businessman, learning about money. Cause once you start making a little money, then you're like, okay, now I have to learn about money. And that's been my career, dude. Now this, fast forward to today, I guess I have 5 or 6 companies this year, they'll do probably $1 billion in revenue. All privately owned. We got $5 billion worth of real estate. We're combining real estate and Bitcoin. We've built a hybrid model that I think will revolutionize the way people buy real estate. The last major event in real estate was 1960 when a REIT was created. There was a thing for tax advantages, REIT, Real Estate Investment Trust was created. And that's really the last time. It's been 65 years since anybody's done anything very innovative in real estate. What we're doing today is we're buying real estate, trophy quality real estate, and adding Bitcoin at scale, putting the two together, merging the two. We pay cash for both assets and merge the two together as one asset. It's a very, very simple thing to do, but we're doing it at scale, and we're going to take that public, and I think it's going to be the next monster thing that happens in real estate with real estate investments.
I love that. That's really cool. And by the way, I saw Undercover Billionaire. So I was a big fan of the first season. I was a big fan. I saw also now the second season with you. And it's really, really cool to also now have you here. And I want to get later maybe a little bit in that. But maybe with the Bitcoin story, how did you get interested in Bitcoin? I see a lot of successful investors, when they have one tranche of investment, then they kind of get a little bit blind to other things, and you really will open and say okay, let's get into this whole Bitcoin thing. How did you first get interested in that?
Yeah, so about 13 years ago, this is 2012, I guess, maybe 13, somewhere about there. I get a phone call. My office gets a phone call for our education company. 3 or 4 times a year, somebody offers me money to go speak at some event. Otherwise, we just do our own events. But I used to do, between the ages of 31 and 45, I was speaking, 100 times a year. I was on the circuit. People were hiring me from around the world to go speak at their events on sales, marketing, scaling, business startups, attitude, leadership, all these topics, right? I'd written a couple books and people wanted, basically used me at these events as information or entertainment or a combination. And I quit doing that. But this group called up in Las Vegas and said, hey, we're going to be in Vegas for an event. We'd like Grant to speak. We think he'd be a perfect fit for our organization. I think they had 800 people on their team. But we can't pay him in dollars. We only have this thing called Bitcoin. We can pay him in Bitcoin. Okay. Now they could have said Solana, Ethereum, Ripple. None of it meant anything to me today. I didn't know what Bitcoin was. This is the first time I had heard about it, but I didn't know anything about it. And I would still say today, I know if a person could know 100% about Bitcoin, I probably know 30 or 40%. I don't understand this whole universe the way you may, or my brother does, or many of the Bitcoiners that have been studying this for years. But they told my president of my company, hey, we can pay him in Bitcoin. We'll give him 115 Bitcoin. And my president of the company said, no, we're not. We need cash. And I heard the conversation and I said, look, dude, Jared's his name. I said, Jared, I'm going to be in Vegas anyway. The people are asking me to do the thing I love to do, which is help people. The fact that we don't understand what Bitcoin is isn't a reason to say no. Let's just take it. So we called the guy back and said, okay, we'll take the Bitcoin, even though we don't know what it is. And I did. I took the 115 Bitcoin. I still have them today. I think I sold 8 or 9 of them to pay for the flight over there, because that's how conservative I am. I'm like, okay, let me just get my expenses handled out of it, and I'll keep the others a lottery ticket. Well, this is kind of what we're doing with real estate today. Okay. We're not educating people about Bitcoin. We're basically buying a piece of real estate, merging some Bitcoin with it like a gift. It still cash flows. And we're telling our investor audience, hey, by the way, the real estate comes with Bitcoin. You can come to Vegas and speak, and I'm going to give you Bitcoin. It's a gift. Like if you're going to give somebody something, they're probably not going to turn it down, even though they don't understand it. And so I still have that Bitcoin today. It was probably it was the single best speaking gig I've ever done in my life. Because whatever 115 times 116 or 117 is, a decent speaking gig. So what I did was I watched it for 3 or 4 years. And then over the last, 10 years or so, I've been quietly buying it. Keep in mind, I'm a real estate guy and we do education. We own a health company. We own a consulting company that consults HVAC, roofing, plumbers, chiropractors, dentists, roofers to grow and scale their business. Construction companies, we help them scale their business, furniture businesses, auto sales. We help them scale the top line of their company and put their operations in place. So I didn't want to be out there talking to people about Bitcoin and confuse the conversation. So I was quietly buying it. Just like with my health. Okay. My health, I went on a huge commitment when I was 61 years old about getting myself back in shape. I didn't tell anybody anything. I slowly started working on myself. And then the next thing you know, I bought a company to support me in my health. And then I scaled the company out. And then I started talking about it to promote people in line with something I was doing. And not to confuse my audience, but we took a company that had 60 customers and they have 256,000 customers now and did it in 3 or 4 years. So I did the same thing with the Bitcoin. Like I started adding Bitcoin to my positions in real estate slowly, not telling anybody I was doing it. Basically, I'm eating my own dog food. I'm buying a product that I would offer to other people, testing it on myself before I unleash it on the marketplace. So that was my introduction to Bitcoin. Gary got involved with it. We would talk occasionally about it. He was orange pilled before I was. He said something to me once about, you should look at your cash distributions. Or actually, he said to me, I wish you'd have been paying me the cash distributions for my real estate and Bitcoin. And so I went on Hold'em, one of the sites, and I programmed, hey, if I would have paid $100,000 a month since 2013, because I paid myself $100,000 a month. I actually paid myself $1.6 million a month from the real estate cash flow. And I plugged that number and I'm like, I'd be worth $44 billion. And then I'm like, okay, I'm going to start converting my cash flow from my real estate and buying Bitcoin. I slowly started doing this until this year when we created our first fund of real estate and Bitcoin. So that's kind of my short story. I haven't read the white paper. I have not done 100 hours. Maybe I have. I doubt it. I've met with Mike Seyr a couple of times. I believe in Bitcoin. Mostly because I don't believe in dollars or paper. And most real estate guys, Robin, don't believe in cash. They don't, because that's why they take their cash and convert it to a real asset. And I believe that real estate people and Bitcoin people have a lot of things in common. The kind of real estate we buy, like this piece of real estate right here is in Boca Raton. Okay. It's best in class, but the location is ridiculous. The location is one of a kind. Like there's 21 million Bitcoin or maybe 18 million left. There's only one of those properties in that location. There's a bunch of similar properties, but there's only one in that spot. And there will only ever be one in that spot. So real estate people like scarcity. They believe in that, right? They like hard to rebuild, very, very expensive to rebuild that asset. And it would take 3 or 4 years. So these are the similarities between the real estate and the Bitcoin, that they're scarce, they're real. One's digital, by the way. They have this yin yang kind of relationship. One's real, one's digital. Okay. One cash flows, one doesn't. One is very stable. One's like a maniac. In fact, the audience that owns it, if it's not maniacal, they become bored with it. So I put these two things together, right? It's a hybrid of personalities that I believe create this superhuman or super power kind of asset class. And we've done 12 this year already. So we already have 12 of these funds done. And I'm working on taking the company public now here at the end of the year. So that's my short version of my 12 years learning about Bitcoin.
It's super interesting. And it's also for me interesting to hear that there's those two things kind of come together. And a lot of the things that you said like really resonate, because you have like real estate, you don't have a second exactly price, and it's not like you immediately liquid, but it also has like this four advantages and disadvantages, and like they are like this yin and yang kind of a thing. One thing I'm also curious is for my parents' generation, basically like, I don't know, 40 to like 60 years old, something like that. They see, especially in Austria, but I think also around the world, they see real estate kind of as their savings vehicle. Not my parents, but like my parents' generation. So they just save in the real estate. They get the 20% down somehow, and they pay their mortgage for like 30 years, 20 years, whatever the time frame there is. And I kind of see it for Gen Z, kind of for the normal Gen Z that aren't the entrepreneurial types or like the mainstream Gen Z type, it's impossible. I don't know a single person in my generation here in Austria that owns a real estate property. And which is crazy. And I kind of see Bitcoin maybe as the real estate opportunity of my generation. Is there something to that thought that you see, like, okay, maybe Bitcoin is the vehicle for the new generation?
Yeah, look, there's two parts of that conversation in my mind. One is, the single family home is, when we were growing up, that was supposedly an asset that you invested in it, even though it didn't belong on your financial statement. It was an asset. You lived in it and you put money down, 20%, and you paid it off over the next 30 years. And then it becomes a piece of equity, right? Well, yeah, maybe, but not really. Okay. It's not really an asset because you're having to live in it. Really, a house is a utility. It is not an asset. Okay. Now the fact that none of your generation owns any real estate, okay, they still live in something. They're paying for something because they have to. You can't live in your Bitcoin. So in my generation, it was like, it was sold to us worldwide, by the way, around the world, that a home is, you deserve one. And if you buy it, it's an investment. It's not an investment. It's a trap of equity. Because any of that money would have been better off. The 20% your parents put down on a $400,000, 400,000 pounds, whatever it was, they put $80,000 down that's dead, earning nothing. And then they feed the other 340,000 or whatever the number would be. They feed that for 30 years. At 6 or 7 or 8%, plus the property taxes, plus the maintenance, plus all the issues and the problems, and they lost their mobility. That doesn't sound like an investment to me. It sounds like jail. The Bitcoin, on the other hand, for your generation, they still have to pay rent. They're going to have to pay rent. They're going to have to live somewhere. Now, if you go back to your parents, if your parents would have been offered, to put 20% down on a $400,000 house, 80,000. If they'd have put another 2% down and made their down payment 88,000 rather than 80, and 8,000 of it bought Bitcoin. It bought whatever, how many Satoshis would that buy? I don't know, but, and they would have blended the two together. Okay. At 15 years or 13 years into that mortgage, they would have had enough liquidity from the tiny bit of Bitcoin they bought. It would have only cost them maybe $56 a month on the extra 8,000 they borrowed. On a home equity loan, by the way, which is typically cheaper credit than a business loan or a credit card or a margin call, they would have had liquidity the entire time while they owned that home. Okay. It's not easy to sell a house. If your parents wanted to sell their house today, it might not sell for 9 months or 18 months. So, I don't know that Bitcoin is the real estate investment that we were sold. I think they're very different in that way. You know, I would not compare the two. I think they work together better than they work separate. And I think your generation needs a place to live. And I also believe in the next 3 or 4 or 5 years, we're going to have a massive monster real estate boom on this planet because it's going to become more and more expensive to build this stuff. You're not going to beat that. You're not going to fix the problem with building housing. And even if 3D printing comes about tomorrow and you can start building homes in 3 hours for a tenth of the price, if that happens, the cost of the land where you drop the 3D printing is going to explode. Because now it's going to be housing's cheap to build, but that piece of land in the perfect location is going to become even more valuable to the person that owns it.
And this is what you're doing with the real estate Bitcoin REIT that we talked about before, where you combine Bitcoin with real estate.
Yeah. And we're not buying single family homes either. We're not buying places where one little house where, you know, you get married, you move in and you have 2 kids, this dream, this fairy tale that we tell people. These are large apartment complexes with 200, 300 units, massive swimming pools, beautiful gyms. You can walk across the street and get your food. It's got security on it. It's got a gym bigger than a gym you can go join down the street. You probably have yoga teachers underneath the, you know, massage places. Like you have all this retail connected to this. It's a community. It's not a home. And people can live together in community and literally pay rent every month. They could stay there 14 months or 14 years. It's their choice. They're not stuck. It didn't require down payment. It didn't require a 30-year commitment. And if you don't like the way the people treat you, you can leave. Now, it is rent. Okay. It is rent. And a lot of people are like, I don't want to rent. I want to own a home. Okay. Well, then go buy a house. It'll cost double on a mortgage. And you have all the maintenance and the obligation, and you're stuck for 29 years. So in America, in the top 20 cities, except for 2 cities, it's cheaper to rent than it is to own by 50%. So it's actually a better investment in America to rent than it is to own, and take the difference of the money, take the difference rather than buying a house in America in those 20 cities. It would be a better investment to take the 20% down payment that you would use to get a mortgage and go invest in the S&P 500 or, you know, the Magnificent Seven or Bitcoin or almost any coin. It would be a better investment to use that down payment to pay rent over here and use the equity to invest in something that's liquid and more volatile and has more upside than a single family house.
It's super interesting. I hear that from basically everyone that invests in real estate, that you should rent, that you privately should rent, but buy real estate as a company and as a business. Basically, it's super fun to see.
Yeah, rent where you live, and then use the difference to go buy real estate that cash flows. So that's what we do. We buy real estate that cash flows, large complexes. Let's say there's 300 units and 270 people are constantly renting 300 of the units, and it's cash flow positive. We add Bitcoin to that purchase. So if the deal was $100, we just add another 100 and add $100 of real estate, $100 of Bitcoin. We get income from it, or 100 million and 100 million, whatever the number is, 10 million and 10 million. We add that. We rent it to the tenants. We still cash flow positive. We use the cash flow to continue to buy more Bitcoin each month. And then we have these 2 beautiful assets blended together that both are necessary. You know, money is being destroyed because of the printing press. It will continue to print. No country has a way not to print money again. Like China will print again. Europe will print again. America will continue to print. We all print. There is no world where we don't print more. And the more you print, the more real assets go up in value.
I want to get a feeling for how, and I think as in the question that probably a lot of people will ask in the comments later on, of how big of an allocation Bitcoin is already for you. Obviously, like you have a lot of real estate, but now if you add like from the real estate, also always the same part of Bitcoin on there, your Bitcoin allocation and portfolio probably will rise quite significantly.
Yeah. So I wish I had this pie chart to show you. Like there's two questions you're asking me. One, the first one I'm not going to answer. My allocation personally. A better way for me to tell you how committed I am to the asset, both assets, by the way. I'm not getting rid of my real estate. I was in a room once on Spaces on X, and somebody said, Grant, you should get rid of all your real estate and buy Bitcoin. I'm like, I have a $5 billion real estate portfolio. It took me 20 years to build it. Okay. Like, should I also get rid of my education company that does $100 million a year? Should I get rid of my health company that does $150 million a year? Should I get rid of my consulting company too? Like, should I get rid of my wife and kids and replace them with Bitcoin? Like, this is ridiculous. Like Bitcoin cannot be the only asset on the planet. So I'm not getting rid of my businesses. My businesses create fiat. Okay. And I use the fiat. I take the fiat and I invest in other assets that are better than the fiat. My clients don't get paid in Bitcoin, so they're not going to give me Bitcoin for my services. That's just not happening at scale on planet Earth. So I take fiat. I don't know why people complicate this. You go hustle fiat. You get somebody to give you $100 and convert it to something better than $100. Gold, silver, stocks. I mean, I don't like the paper to paper, right? I'd rather go paper and prove the paper. I'd rather take a piece of paper, a pound, and convert it to something better than that, which if I go to certificates or pieces of paper, unless I'm an insider in the deal, that piece of paper is just another piece of paper.
I do love the watches from Coin Vigilante, but today I have a very special message, not from me, but from the CEO himself, Carlos from Coin Vigilante. Let's hear him.
To all the Robin Seyr podcast community, I'm Carlos Estrada from Coin Vigilante, and we're sponsors of the show, and we're going to give you a very special discount exclusive to you, 10% off your order at coinvigilante.com when you use Robin at checkout. We have really nice watches that you guys can buy right now for 10%. This is a transparency edition, beautiful watch. These watches are worn in over 55 countries and counting. This discount is just for you, exclusive to the Robin Seyr podcast. We have limited editions. We have limited productions. These watches come in very nice packaging, boxing material, and they are collector's item for Bitcoiners only. Enjoy the discount. Thanks for supporting the show and Coin Vigilante.
I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct correct setup for you personally. They're also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC-free Bitcoin. That's why I use simplemining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together.
You follow me? Unless I'm an insider.
Yeah, like stocks as a paper, like an
Yeah,
IOU basically.
If I'm creating the piece of paper and taking a company public, I'm an insider, and like I don't mind that conversion because that's better. I created that piece of paper, right? The U.S. government did, or the Fed. So I'm trying to convert a piece of paper into something better than paper, which is cement, glass, steel, NVIDIA, Bitcoin, gold, silver, anything. Now I don't do gold and silver. I don't do stocks. I do a couple of things and I do them over and over and I beat them to death. In real estate, the most important number in real estate, and I'm getting off of your question right now, and I'll go back to it, but the most important number in real estate is not the cap rate or the price you paid or the ROI or the cash on cash return. The most important number in real estate is the number of units. Guess what? The most important number in Bitcoin is not how much it sells for today. The most important number is not your cost basis. The most important number in Bitcoin is how many units do you own? If you're starting with Satoshis, it's going to be 1 Satoshi, 10 Satoshis, 100 million, boom, 1 Bitcoin, 2 Bitcoins, 10 Bitcoins, 100. If it's going to go up, the most important number you will have is how many units you have. Okay, period. It won't be the price you paid to get in it. If it's going to go up. So the number of units is your scaling number. McDonald's, Coca-Cola, Google, Facebook, these companies, NVIDIA, these companies are monster. Disney tickets. They're monster companies because of the number of units, not the quality of their product. So now, what percentage of my portfolio or my net worth, I'm not going to answer, but I will tell you this. We just did a $230 million asset. Let me see if they can bring me this. Call Andres. I might have it on my phone here to show it to you. We bought a $230 million asset, 66 units, and we took 230 and added $100 million of Bitcoin. Okay. Now that would look like 50% of the real estate, but really it's 1/3 real estate, 1/3 debt on the real estate, good debt, and 1/3 Bitcoin. That's our commitment on that deal. A third, and a third. A third debt, a long-term 5-year mortgage at 5%. I'm getting 5% money that cash flows and buys me more Bitcoin. The pie chart will start out where it looks like a half Bitcoin and half real estate, because the mortgage isn't counted. When you look at the equity in the deal, it's going to be a half and a half. But by the time 5 years goes by, it's probably going to be 90% Bitcoin and 10% real estate. Even though the value of the real estate didn't go down. Value of the real estate's still 230 million or 300 million. You follow me? But the Bitcoin, if it does its thing, if it just doubles from here and gets to 200,000, it'll start taking up more of the pie chart.
Yeah, that's what I was kind of wondering with the question of, like, if you start integrating in all the real estate properties Bitcoin, and Bitcoin does what it did the last 10 years, it will automatically be a huge part of the portfolio.
Yeah, it could be We're doing 12 deals right now. It's $1.2 billion of real estate, and we're adding 200. We'll end up with about $250 million of Bitcoin. I think in the next 3 years, I could end up at 1.2 and 1.2. I didn't change my real estate. I didn't add to the real estate, just that portfolio. And then in the future, it could be $3 billion worth of Bitcoin and $2 billion worth of real estate. But I have both of them. So if the Bitcoin dives, if the Bitcoin falls apart, I still have my real estate. What's super cool is that I'm onboarding people into real estate. Into Bitcoin that don't know anything about Bitcoin. The phenomenon is happening because of this portfolio. And the reason I think it's going to be, like the first greatest innovation in real estate for 65 years is because the people, look, 99% of population Earth already has reality with real estate. They have an agreement. Is real estate good? Yes, it's good. Okay. Would you like to own real estate? Yes, I would. Okay. If I gave you some real estate that cash flowed, would you want it? Yes, I would. Okay. Nobody needs to read the white paper. Nobody needs to read the Bitcoin standard. You don't have to watch 100 hours of Mike Saylor. You're going to just say, yes, real estate is good. It's been around for 2,000 years. People have sought shelter forever. There's an agreement, mass agreement. Yes, I want real estate. Now, if you flip the conversation and say, do you understand Bitcoin? It's almost inverted completely. 98% are going to be like, I don't know what you're talking about. I don't know what it is. It sounds weird. It sounds like a pipe dream, blah, 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 right? So what I'm doing is leading with my real estate and adding Bitcoin. I'm leading with the place of most agreement. And oh, by the way, it's got some Bitcoin on it. I don't even have to explain the Bitcoin to people. And I came about this talking to Mike Saylor, talking to my brother Gary. I think Eric Weiss was at that meeting, and I was in a room once on X, and there was a debate. What's better, real estate, Bitcoin, or stocks? And I got off that call, said, why not all three of them? Why do we have to argue about which one is best? What if you can put all three together, and create a super product?
I think actually, and this is the same thing. I mean, Saylor obviously, Saylor also did not throw away his company. He integrated Bitcoin into his company. I mean, obviously now it's a whole nother thing than it was 5 years ago. But he also went slowly in there. And I say that to people all the time, like, don't quit everything that you're already doing. Try to figure out how to integrate this thing more than just like throw it over.
Yeah. I love that. I love that because everybody was telling me, oh, you need to put your real estate on the blockchain. That cost me 4 years listening to that nonsense. Okay. All we did, look, all real estate has a LLC wrapped around it. Every piece of real estate on planet Earth probably has a limited liability company wrapped around it. All we did was we replaced the cash on our accounts with Bitcoin, suck it into the same entity. The thing that we're doing different is we're doing trophy real estate. This is best in class real estate, not garbage real estate. Because not all real estate is created equal. All Bitcoin is created equal. Okay. Every piece of Bitcoin is equal to the other piece of Bitcoin. Real estate is not equal. You can have something on one side of the street, across the street, it could be garbage. And right here it could be like pristine. So I want to show you this if I can just show you this pie chart I was referring to, if it'll let me. I don't know if it will.
Sometimes you have to give permission before they start the call, but maybe you can try.
I think it's going to let me show you because it tells a great story. If I can find this, let me see. I can't find it. That's fine. I'll send it to you. Maybe you can insert it for the presentation.
I will insert it later on. But this is an interesting one because I think real estate on a blockchain is just like why would you put cement on a paper? If you know what I mean. It doesn't, for me, it does not make any sense.
Yeah, exactly. It doesn't make any sense. Like, it's just complicated. And, this is a simple way to put to blend the two together. That could be a way for people to have access to both assets and not argue about which one they want to be in. And then your audience is going to be like, yeah, but which one's going to outperform? I don't know. And you don't know. Last 12 years, Bitcoin outperformed everything. You win that argument. But you still only have one asset, so you don't have to pick anymore. People can have the choice of both.
I like that. I'm curious because I think as you assess investment is a lot like Bitcoin is actually look at the Bitcoin, because you say like you don't like paper, and this is a very Bitcoiner thing, that they don't like paper promises. They like the real thing. They like owning the Bitcoin themselves. How in general do you go ahead and say like, is that worth putting into my portfolio? Because you could also, instead of Bitcoin, just take like the S&P 500 to the real estate deal or something else. Like, how did you go ahead and like assess your investment options and do that? Like, there's a physicality of Bitcoin being able to actually own it yourself without paper promises, like one thing that was really important for you?
So you're asking me. I'm not sure I understand the question.
In Bitcoin, it is similar to gold, where you can actually take delivery of the physical thing.
Right.
And you said that you don't like to trade paper for another paper. And this is a very Bitcoiner thing to say, to have like no paper promises. And I'm just curious on how you went ahead and said, what should I add to my real estate? Because you can also add like anything else, like S&P 500 index to the real estate.
But yeah, okay, that's now I get it. Okay, so sorry for my ignorance on that. Well, it's a good question. Why not add gold, right? Because gold's not liquid. Like, it's not liquid. Like, people are like, oh, my gold, you can sell gold. I don't even know where to keep it. I'm 67 years old. I've never owned gold in my life. I've never owned it. No one's ever offered to give it to me. Nobody's ever said, we take gold. I don't understand gold. I don't know why anybody would want to collect it. The fact that it's been around for 2,000 years and is supposedly limited, I don't buy any of that. I don't think it's limited. I don't think it's going to be more expensive to find in the future. I think it's going to be cheap to find in the future, and they're going to find unlimited quantities of it. I'm not convinced about the gold thing at all. They could have said dirt was gold for what I know. I don't, it comes out of the ground. Maybe I'm gonna wear it around my neck. Anyway, I'm not putting gold with my real estate. It has no real use. You're going to melt it down for a ring, maybe, I guess. More likely you're going to lose it. So that's the gold thing. Same thing for silver. Now, stocks, I don't know why I'd put a piece of paper with my real estate. Okay. I know my real estate, the Vatican's been around, or the, Sistine Chapel's been around for how long? Longer than Facebook, Nvidia, Google, Microsoft combined. These companies are going to go away. All these companies that are represented by a piece of paper will disappear in the future. The average company today, when I was growing up, the average company was like 75 years old. Eastman Kodak was, 100 years old. Lehman Brothers, 180 years old. They don't exist today. Every company has a shelf life. Now, does Bitcoin have a shelf life? Maybe. Maybe it does. The real estate, I know for sure that piece of real estate, this deal right here, 100 years from now, that piece of real estate will still be right there. You're not going to get rid of it. You might scrape it and build something new on top of it, but as long as there's people congregating there, there's going to be a piece of real estate. It's going to be a church. It's going to be a place to live in. It's going to be a place to shop. It's going to be something. So, now why the Bitcoin rather than these other things? It's because it mixes with this thing so nicely. One's real, one's not real. One cash flows, one doesn't. One comes with a big monster depreciation tax write-off, and one has no tax benefits. One's liquid 24/7, 365, and the other one takes a tremendous time to get rid of or to be liquid. See, I like things that I can't sell. And I like things that I don't want to sell. I like things that I'm like, I'm not worried about this, but if I need to sell it, I'd like to. The problem with real estate is you can't sell it, okay? Even the best piece of real estate in the world. This deal right here is $235 million. Who's got $235 million this weekend? Let's say I need the 235. I can't sell the whole thing this weekend, which means I don't have to have, should I sell it? Should I sell it? Oh my God. How much is it today? Like, this is the beauty about real estate, is that I don't have to look at it. Let's see what Bitcoin's trading at today. Okay. If Bitcoin went to $1 million right now, okay, it's at 117.8 right now. I'm like, oh my God, should I buy some? Should I get some? Oh, damn, I wish I'd have got it at 108. See, this kind of stress does not come with real estate, because you can't sell it and you can't buy it today. You can't buy that piece of real estate. It's not for sale. And you can't sell it today because they just don't transact that fast. This is liquid. This is liquid, which means I could buy it, sell it, do something with it. Am I missing it? Is it about to take off? I'm going through all this anxiety, right? Now, if you put the two together, and I lay Bitcoin on top of that piece of real estate that cannot be sold, and the Bitcoin goes down to 70,000. So what? I still own my real estate. I didn't plan on getting rid of this. I'm not trading it anyway. I'm waiting for the two together to go up together. So I think that's why, I mean, to answer your question, would I do this with gold? Never. Would I do it with silver? Not a chance. Would I do it with stocks in a company? No, it doesn't make any sense. I would keep them separate. I would buy the real estate and go buy NVIDIA stock and have them separate. There's no benefit of combining the two. But when you combine the real estate and the Bitcoin together and then bring stock and then go public, you basically have a treasury company with a real company. I'm going to take advantage. I'm going to exercise a competitive advantage over the 190 treasury companies that are taking zombie shells, raising money to buy Bitcoin, and the only thing left in that house is Bitcoin. And that is going to blow up in a lot. One of my biggest concerns about Bitcoin today is a black swan event with one of these treasury companies, or many of them failing, all trying to replicate what Mike Saylor's doing. And they're not, by the way. They're not replicating what Mike did. And most of them are not replicating what he did. He had a company that had real customers, real products, a real service, real income, and real EBITDA. These guys that are coming in right now, no product, no service, no customers, no EBITDA. So I have Bitcoin goes to hell, goes to 70,000. I still have cash flow. I still have tenants. I still have real property. I still have tax write-offs, and I still have the appreciation that comes from long periods of time. And I have an asset sitting there that I don't have to get rid of because it's still producing revenue. And I just sit and wait and basically use the cash flow from the asset to buy Bitcoin at a lower price because I'm dollar cost averaging our cash flow every month to buy more Bitcoin. So I just wait out the 2-year winter. If there's a 2-year winter of Bitcoin, if we go into 2 years of hell or winter, then I'm so what?
We just hold it. I love that. As we're coming closer to the end, I have one question. I usually ask a different one, but I'll change it for you as a starter one that doesn't fit that nicely. What would be your number one advice for so many Bitcoiners of us that are fully invested in Bitcoin? Like I myself, like almost only Bitcoin, my small company, and nothing else. Do you have any advice for, like, let's call them Bitcoin maxis like me?
Yeah, I hope you're right, man. You know, I hope you're right. And let me also just say that, look, if Bitcoin goes to $1 million and let's say you have 100 pieces, now you got $100 million. At some point, you're going to have to make a decision to do something. You're going to want a yacht. You're going to want a house. You're going to want cars. You're going to buy something, bro. This is not a Bitcoin only universe. If Bitcoin goes to $1 million, you're going to see inflation that we'll see inflation of luxury items that we have never experienced before on planet Earth. So all you Bitcoiners that you let's say it's the Bitcoiner that never had any fiat. I've had a lot of fiat. I've burned through tens of billions of dollars in my career. And I'm proud to say that I've earned a lot of money over my lifetime and figured out ways to earn a lot of fiat. So I've already had the experience of having money and saying, I want a car, I want this, I want to buy something stupid, blah, 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 the watches and all that. Some of these Bitcoiners, they've never had that experience. Like if it goes to 1 million or 13 million, you can be like, fuck it. I don't even know how to swim, but I want a yacht. You will want a yacht. And those yachts, by the way, I think that we're going to go, Robin, a little side topic here, but I think that we're going to see more billionaires created in the next decade or two. They could 10x. We could go from 3,000 to 30,000 billionaires on this planet. You cannot build enough yachts or planes, by the way. There's a shortage of super heavy jets right now on the planet. And, because of, Trump's bonus depreciation, before the big, beautiful bill was passed, there was a surplus of super heavy jets. I know because I was looking for one. I had like 11 different deals working and there was no buyers for the 11 deals, the 11 super heavy jets, 650, 7500s, low hours. There was, about 11 or 12 of them on the market. And there was a handful of buyers, maybe 1 or 2 guys trying to buy those planes. And they only wanted 2 planes, right? So it's like there's still a surplus of 9. These are small numbers, but there was 11 planes, super heavy, low hours, great condition. And there was only a couple buyers on the planet. This is in the last 8 weeks. The big, beautiful bill passed. Literally within 4 days, all 11 planes were gone or under contract. And now they're all gone. Now they're all sold. I think one of them's left out of the 11 and it had the highest amount of hours on it and it's still on the market. And the guy raised his price, by the way, because that big, beautiful bill came. This is another thing about the Bitcoiner only guy. Okay. You guys don't get any tax write-offs. At some point when you get rich, you will be seeking shelter from the IRS. And I think there's a lot of coiners. I know my brother talks about this a lot. There's a lot of guys out there in Bitcoin that do not understand the tax ban. And you better get your head wrapped around it because you can lose. You can get Wesley sniped. You can get Nick caged. Okay. Both those guys, by the way, lost everything to the IRS because they didn't know how to fund their taxes. That's the beautiful thing about real estate, by the way. That $230 million piece of real estate that I talked about, when we buy it, it comes with an $80 million tax depreciation. So imagine you and I buy that $230 million worth, $230 million complex. You do half, I do half. And we had 100 million of Bitcoin. So you're in for 165. I'm in for 165. I come to you and say, Robin, look, I'm going to get a loan on the deal so I can return 80 million of your money. Now you're in for 80 million. I'm in for 80 million and we're controlling $300 million worth of real estate in Bitcoin. And then I come to you and say, oh, by the way, here's an $80 million, $40 million tax deduction for you and 40 million for me. Do you own Bitcoin with a tax deduction? I could sell the real estate and make money. I could keep the real estate and make money. I could improve the real estate and make money. I could sell off part of the Bitcoin if it explodes. It goes to $1 million. I could sell the Bitcoin. We could make triple or quadruple our money on the Bitcoin and we'd still own our real estate. Or I could package all of this with 10 or 12 or 15 other deals and go to the public markets, turn it into stock, and you and I become shareholders in something that should outperform all these Bitcoin treasury companies. Because I have a real asset.
I agree with you 100% on the Bitcoin treasury companies. I do think there's a very good chance that a lot of them go to vapor because they are going further and further out the risk curve to keep up with Michael Saylor, which they can't. We have an end routine in the podcast, the fun one where the previous guest asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, if you had the chance, would you rather not be able to listen to music ever again or not being able to taste anything again?
I would rather not taste anything again.
I love that. That's a hard one, but it's, I think it's good for your health, not being able to taste for sugar and stuff.
Yeah.
Really cool. Thank you so much.
I think I'm giving up less, Robin. The reason I went with that answer is because I'm giving up less, because most of the time I'm in such a hurry. I don't even really taste my food. I'm just using it as fuel anyway.
I love that. Really cool. Then, yeah, thank you so much, Grant, for being on. I usually ask before I let you go where people can find you, but I think you're well findable online on every single platform.
Yeah, just search my name one time and you'll be all right. But last thing I want to say to everybody is, man, I'm pulling for all you guys out there that I don't know. If I'm ever in public and you see me, make sure you stop me. I love successful people. I love people that are committed to being successful and learning about money and sales and scaling and marketing and anything I can do to help any of you. I'm praying for you and pulling for you. Success is very, very important to me. It's something I think Robin's not talked about enough, whether you're successful in legacy businesses, or whether you're successful in the crypto world or athletics or music or food, whatever it is you're successful in, man, I get inspired by people that are successful because it encourages me and inspires me to do more, and want to do more, and reminds me that I can do more. So to all you guys that are successful out there, I'm pulling for you.
To all 10Xers out there. I listened to your book, The 10X Rule. It was really cool. It also showed me, because I was kind of worried to do too many podcasts because I do have one a day and stuff like that. I'm like, no, I'm not doing enough. So I'm actually doing more and more shows. But yeah, thank you so much, Grant. And for everyone, also thank you so much for everyone for watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye. This content is for educational and entertainment purposes only and does not constitute financial advice.